Gold is taking a breather today, Tuesday the 25th of August, 2026. Spot prices have eased to around $4,630 per ounce, after touching $4,645.74 yesterday, the highest since the 15th of May. That fall of about $15 is small, but it is the first real hesitation after a weekly gain of more than 5%. The pause comes ahead of two events, the US PCE inflation report and a speech by Federal Reserve Chair Kevin Warsh. Technically, the relative strength index is overbought and the MACD momentum gauge is fading, which often precedes a short-term pullback. So the real question is whether this is healthy profit-taking or the start of a deeper correction. To understand today's pause, look at what created the 3-month high. The latest leg was a monetary bid, not industrial demand. The US dollar weakened after the Treasury doubled its buyback program for longer-dated debt, raising questions about the dollar's purchasing power. Tim Waterer of KCM Trade said on the 24th of August that gold is taking its cues primarily from the softer dollar, while higher yields signal economic strain and policy uncertainty. Last week, global gold ETFs pulled in $3.52 billion, or 23.6 tons, according to World Gold Council data. That is institutional conviction, not just speculative trading. The gold-silver ratio widening to about 67.5 confirms gold's safe haven role is leading, not silver's industrial cycle. Right now, the market is holding its breath for PCE inflation, the Federal Reserve's preferred measure. If PCE is sticky, the Fed has less room to cut rates, normally pressuring gold. But there is a twist. The odds of a September Fed rate hike are near 30%, down from better than 80% in mid-July. That collapse in rate expectations has been a major tailwind, even as the Fed keeps its options open. Today's retreat suggests traders are unwilling to add fresh longs before Warsh speaks. They want any shift in tone, because a cautious message would keep gold's rally alive, while a hawkish surprise could trigger a deeper flush. Looking ahead, the next few sessions are a battle between fundamentals and technicals. On the fundamental side, Middle East tensions are simmering. Treasury Secretary Scott Bessent warned on the 24th of August that at least one major financial institution could be sanctioned this week over Iran-related business, and Tehran says it is fully prepared to counter. That uncertainty often puts a floor under gold. On the technical side, JP Morgan's Greg Shearer notes prices are above the 200-day moving average near $4,340, but capped below the 50-day at $4,730. If PCE is soft and Warsh sounds flexible, a retest of $4,700 is realistic. If inflation is hot, the overbought reset could target $4,550 first. The takeaway is clear. Gold is not weak, it is pausing after a powerful move. A 5% weekly gain, mining costs still being outpaced by prices, and year-to-date ETF inflows of 116 tons point to real structural support. But today's small decline is a warning. Short-term direction now depends on PCE and Kevin Warsh's tone. Watch the $4,600 level as a line in the sand today. If it holds, the pause is noise. If it breaks, expect a healthy correction toward the next support zone. Either way, do not chase momentum blindly. Position for the next catalyst, not the last one.